Hello friends, in today's video blog we will discuss 5 habits that may put a taxpayer on income tax radar. As a taxpayer, to be on an income tax radar is the last thing that I expect in my life. It is not the case that I am not paying my taxes honestly, or maybe I have something to hide. To be fair and logical, as a taxpayer, even though my slate is clean, still it is practically impossible for a taxpayer to explain each and every financial detail or transaction to the income tax department. To err is human and sometimes it is unintentional. Before I proceed, let me clarify that the details shared in this video blog are based on my personal understanding of the subject. It is my own interpretation that may or may not be right. Therefore, I am not claiming that what I am sharing is 100% correct, but in my opinion, this is how the things work. As I shared in my post, 7 types of income tax notices that even an honest taxpayer gets scared once he receives any income tax notice. The first reaction of the taxpayer is that now I am on income tax radar. It is not the case always. Most of the times it is general query or clarification, and that can be easily answered by the income taxpayer. In my opinion, if there is no major mismatch or discrepancy on your financial details, then you are honest taxpayer. As I understand, minor discrepancies are ignored by the income tax department. These days, income tax department is using the technology extensively. Gone are the days when accessing officer used to manually check every return. Today, the department has access to all the information related to the taxpayer, thanks to permanent account number or PAN. As I keep highlighting in my posts, that the entire tax system is automated, and on a click of mouse the entire details are on the screen. At the same time, as I understand, income tax department has complex algorithms based on data available in the system. It highlights any anomaly or mismatch or discrepancy in the taxpayer data. Any variance in the data may put you on an income tax radar. Now how it works? Let's take the example of one of the readers of this blog, Mr. A from Gurgaon. He is an entrepreneur, and from last 5 years he is declaring an average income of rupees 10 lakh in his return. He maintains 5 bank accounts and cumulative balance is around 54 lakh in these accounts. He received income tax notice to explain the source of income in bank accounts. Reason being, his last 5-year income as per ITR is 50 lakhs, and during this period he deposited 54 lakh in his bank accounts, including 15 lakh post demonetization. The big question is how he is managing household expenses. Now he is on income tax radar. Prima facie, 100% income was not declared. This was just one of the simplest examples. The algorithms of income tax department are far more complex. Basically, these algorithms study the financial behavior of the taxpayer. Now let's check out the 5 habits that may put income taxpayer on income tax radar. Before I share these habits, let me share that as your credit behavior determines your credit score, similarly your financial behavior determines whether you are an honest income taxpayer or not. Any sudden change in financial behavior without a corresponding change in tax status may put you on income tax radar. The following habits are more or less linked to the financial behavior. Some cases are specific in nature and cannot be generalized. I will explain the same with each point. Now, number 1 is sudden withdrawals and deposits in bank accounts. In my opinion, this is one of the early and initial signs to put a person on income tax radar. To share a hypothetical example, I have a particular financial behavior that is linked to my income level. You may read income tax status. In my bank accounts, there is an average monthly deposit of 1 lakh and withdrawal of 70,000 towards my household expenses and other expenses. I save 30,000 per month, that is national average savings rate. I declare annual income of approximately 10 lakh after availing various deductions. Till this point, nothing suspicious in my case. Assuming one fine day, I deposited 10 lakh in my bank account. There must be some reason for this deposit, as it is not my normal financial behavior. Let's say I received this money towards maturity of some investment or a gift from my parents, that is amount is exempted. The algorithm of income tax department will check the money trail, and if they will find the chain or link, the transaction will not be flagged in the system. In case the money trail is untraceable and the taxpayer has not declared in ITR, then the transaction will be flagged and I will be on income tax. Before any action, the income tax department will wait for my income tax return. That is how I declare this money. The same holds true for sudden withdrawals also. To summarize, if you carry out any high value financial transaction, then you should have valid and logical reason and justification for the same. Here there is no standard definition of high value. For a person filing an annual return of 50 lakh, a transaction of 15 lakh is a normal transaction. But same transaction for a taxpayer filing annual return of 15 lakh will be flagged in the system. Now number 2 is overspending. There is a famous saying for a particular community that if they have rupees 10 in their pocket, they pretend they have rupees 100 and spends rupees 1000. This is also called show off and may put you on income tax radar. There was a news report recently that only 24 lakh taxpayers file an ITR declaring an income of more than 10 lakhs. At the same time, every year almost equivalent number of people buy a car. The maths doesn't match. Now you must be wondering how come a person earning say 10 lakh per annum is spending 15 lakh every year. One of the examples is of my friend. Her father is a doctor and she earns rupees 1 lakh per month but spends average 1.5 lakh per month. The deficit amount is paid by her father. Her father pays her credit card bill through cash. Here income tax department takes help of annual information return. Though it is not a foolproof method, but still any consistent behavior in this regard is captured in the system. Now you must be wondering, a father can give to her daughter and there is no gift tax. I agree, but in this case both the father and daughter will be on the income tax radar to find out the money trail. Based on my knowledge and understanding, in the majority of cases these gifts are part of black money. The same thing happens and my friend was not able to explain the source of funds when she received a notice from income tax department. The point I am trying to make is that you should have logical and reasonable justification to prove the source of funds. Any overspending will put you on income tax radar. You can overspend provided you can justify the money trail. Another reason for income tax department to believe overspending is underreporting of income. It is called grey economy. I am earning 15 lakh and spending the equivalent amount, whereas I am declaring my income as 10 lakh. Therefore 5 lakh will be overspending if we assume that I am correctly declaring my income in ITR. Rest 3 points we will cover in part 2. The link of part 2 is visible on your screen. Hope you like this video. You can subscribe to my YouTube channel. The option is visible on the screen. You can post your feedback, comments and queries through following comment section. I will definitely answer your queries. For more such interesting and informative posts and videos, you can visit my website www.nitinbhatia.in. Thanks for watching this video.